Welcome back to Fast Money. Stocks getting crushed again today as bond yields spike. The Dow dropping nearly 350 points. The Nasdaq leading the sell-off, falling more than 2%. It's now negative for the year. The chart master says there could be more pain ahead. Let's get to Cornerstone Macros. Carter Worth. Carter, what do you see?
Well, a lot going on. I think maybe and we'll end with this after we look at some charts. The most important, I think, fact today is the top 5 stocks as a basket, the names we know, Apple, Microsoft, Google, Facebook, Amazon, they were down 0.17% as an equal weight basket, meaning they did what they are supposed to do. They held up very, very well, especially in a tech rout. A few charts. The first, reversal formations. People like to name them. One popular thing, head and shoulders, cups and handles, doesn't matter what you call it. It's how something tends to, in an uptrend or downtrend, start to reverse. And you can see how well annotated that is here. In fact, the word shoulder, head, shoulder, it looks like that image. Now, the second chart is where things go if and as they play out. So the neckline, just again sticking with those visuals, is the intermediate lows from which a breakdown occurs. Now, those two charts we've just seen are as of yesterday's close. Here's the third chart. This now incorporates today's action. We broke very hard, precisely at the neckline. And the question is, how far do you go down? There are some tricks of the trade, something known as a measured move, which is considerably lower. But if you look at the next chart, this is important. The trend line, in effect, for the NASDAQ composite, a very precise trend line, was broken today. So you have the head and shoulders formation and the trend line, and one of the biggest down days of many, many weeks, and it's right at a juncture where pattern work might predict it. Two more. This is a 2-panel. Now, this is the NASDAQ 100 on the top, and its relative performance to the entire NASDAQ. And what we have here is a circumstance where these stocks have underperformed, and we know that because they've been flat to slumpish, Amazon and Apple and Facebook and so forth, Google, as lower quality names in the NASDAQ have continued higher. But every instance, going back for some 20 years, when you've had a dip in the relative line to this trend, they start to actually come to life relative. And we saw it today, down only 0.17% for the top 5. So put it all together, let's end with one stock. Relative strength's a very important thing. Google was down for about 7 minutes today. Imagine that, in the morning, and basically was green for the rest of the session. So there's free will. People can sell everything. They have margin calls. They choose what to sell. They choose what not to sell. No one was selling Google. That alone is a hugely bullish thing.
Carter, can we back it up for just a second to the chart of the NASDAQ when you said the break could be considerably lower? What did you mean by that?
Well, so a measured move essentially is the width of the range, this is esoteric, from the head to the shoulder. And if you were to have a move that's commensurate to the move from the head to the neckline, you're talking about another 4 to 5%, which would then represent a definitive break of the trend line, which we just started to break today.
All right. Carter, thank you. Carter Braxton Worth of Cornerstone Macro. Guy Adami, I go to you. Which chart do you like? Why are you laughing?
Well, as you know, Carter sits atop the Parthenon of things, along with Louise Yamada. I just dig Carter Worth, right? I mean, it's just fantastic. I think Google, I think he's totally right. Google's, Karen mentioned at the top of the show, that's the cheapest one of the FANG or the MAGA complex that Dan's talked about, and I think that that's the one that's going to provide you with the most safety when the market goes down and the most upside if it continues to grind higher. I think you have to have your eyes firmly on yields in form of the 10-year. But if yields do stall here and go back down, you're going to have regrets if you didn't buy Google. And I know there's some Jay-Z fans out there that are smiling right now.
Oh, I thought you were going to say Jay-Z is a fan, and he's smiling right now because he's watching the show.
No, that goes without saying. I know he's a fan. The only reason I knew his song Regrets is because he DM'd me and said, you got to get Regrets in, G-Swizzle.
I'm sure he did. Dan, what do you make of this call on stick with the 100, NASDAQ 100, but the NASDAQ more broadly could see another drawdown?
I agree with it 100%. And let's just talk about Apple. It's down 17% from its recent all-time highs. I think there's some support not too much further than here. There's been a couple drawdowns. That September drawdown, 25%. That first quarter 2020 drawdown in Apple was about 35%. So maybe you get something closer to the 25% or so. So that's where I would kind of start picking at Apple a little bit. Microsoft, it's actually acted pretty well. I think you probably have some great support at 210. Now, valuation-wise, it probably doesn't look like Facebook or Google does, and I know those were Dan Niles' picks, but I think Apple and Microsoft are the mega cap tech names you want to buy if this thing gets a little nastier over the next couple weeks.
Shepard Smith here. Thanks for watching CNBC on YouTube.